The rainy season is causing an increase in patients. And BDMS, well, one of Thailand's largest private hospital operators, is certainly hoping for a profit surge.
Hello and welcome to Insight AI Brief Set Thai. Today we're talking about BDMS stock. Before we begin, please don't forget to like, share, and subscribe. Okay, let's unpack this for you today, diving into the latest on BDMS. Our mission really is to extract the key insights from their recent financial reports, analyst recommendations, and strategic outlooks. Give you the full picture.
Yeah, and what's fascinating here is that despite external pressures, like political uncertainties, the hospital sector in Thailand, it's shown remarkable resilience. And continuous growth, really, over the past decade. Analysts generally maintain a pretty positive sentiment towards healthcare. They see that fundamental, consistent demand. Absolutely. It's a sector built on necessity, isn't it? And when we look at the numbers, here's where it gets really interesting. That resilience becomes really clear. BDMS recently released its Q2 2025 results, and they offer some great insights. For the second quarter, their net profit climbed to nearly 3.5 billion baht. That's 3,489,918 baht to be exact.
Which is a solid jump.
Yeah, a solid 4.65% increase compared to Q2 2024.
Right. That upward trajectory year on year, even with such large figures, that's significant. It signals, healthy underlying business momentum.
It certainly does. And earnings per share, EPS, basically how much profit per share for Q2 25, also saw a little bump, up to 0.22 baht per share from 0.21 baht last year. Total revenue for Q2 was 26.7 billion baht. That shows 4.0% year-on-year growth. Though interestingly, it did see a 4.8% decrease quarter-on-quarter. So a slight dip from Q1.
Okay.
And looking at the first half of 2025 overall, net profit just over 7.8 billion baht. That's 7,836,353 baht, marking a 5.78% increase from the first half of 2024.
Okay, so if we connect this to the bigger picture, it tells us that even with some, quarterly fluctuations, the underlying demand for healthcare, it remains robust for BDMS, the year-on-year growth. That was primarily fueled by increases in both Thai patients, up 3% YoY,
Right.
and a strong 6% YoY increase from foreign patients in their core countries. And that strong foreign patient growth, it really helped balance out some of those regional slowdowns. A smart move.
Diversification paying off.
Exactly. We even saw, quite impressively, 21% YoY growth specifically from Middle Eastern and European patients.
Wow.
Yeah.
Wow.
Now, that quarter-on-quarter decline in net profit you mentioned, that was largely down to non-seasonal factors. So maybe less of a long-term concern, more just a momentary thing.
Okay, good context.
And it's worth noting, too, their EBITDA margin, that's earnings before interest, taxes, depreciation, and amortization, a key profitability measure, that stayed stable at 23%, actually up 1 percentage point year on year. There was a slight rise in tax expenses, up to 19%, mostly because of reduced BOI benefits, those government incentives.
All right, the tax break's phasing out a bit.
Yeah, exactly. So overall, a pretty healthy operational picture, despite a few moving parts here and there.
That's a great breakdown, clarifies what those numbers truly mean. Now, looking beyond just the last quarter, what about the future? So, what does this all mean for their future strategy and where they're heading?
Right, that's the crucial next step, isn't it? And BDMS has definitely laid out some, ambitious forward-looking strategies. They want to build on this solid base.
Okay, tell us more. What does the roadmap look like?
Well, first up, they've set an ambitious 2024 full-year revenue growth target. They're aiming for 10% growth from their 2023 revenue, which was over 102 billion baht.
Pretty significant jump.
It is, but here's where it gets particularly interesting, I think. There's a big strategic shift underway. They want to increase the proportion of insured patients to 50% within the next 3 years.
50%. Up from what currently?
Up from the current 36%. So consequently, this means reducing the proportion of self-pay patients, which is currently around, 50%.
Okay, so a big shift towards insurance. What's the thinking there?
The rationale, they explain, is this growing trend in health insurance purchases across Thailand, especially among younger people who are finding it, more affordable. It kind of hints at a more stable, more predictable revenue stream down the line, which is obviously attractive.
Yeah, that makes perfect sense. Less reliance on out-of-pocket. Are there specific partnerships or, market trends that are supporting this shift?
Absolutely. They're not just talking about it. They already have partnerships in place, like the exclusive care at BDMS product they developed with Allianz Ayudhya Insurance.
Ah, right.
Yeah, that specifically targets the mid to high income segment. So it shows they're serious about this strategy. And looking ahead, just thinking about Q3 2025, there are also positive seasonal factors expected.
Like the rainy season effects we mentioned.
Exactly. Expecting strong profit growth from an increase in patients due to those post-rainy season epidemics, dengue fever, influenza, plus schools reopening. And on top of that, a growing proportion of complex disease patients. That's expected to boost gross profit margins even further. Estimates put it somewhere between 35% and 37%.
Okay, so multiple drivers lining up.
Right. And in the broader market, the high-end hospitals, they're already seeing medical tourism exceeding pre-COVID levels. Plus, new markets, like Saudi Arabia, could offer even more upside potential. So it's a multifaceted approach to growth.
That paints a very optimistic picture, really does.
Yeah.
But this raises an important question. How do they navigate these complex emerging risks while still pursuing such aggressive growth? I mean, what challenges are on their radar?
That's a great point because, no growth story is completely smooth sailing. One challenge they've faced recently is that Thailand-Cambodia border dispute. Unfortunately, that led to a 12% year-on-year drop in CLMV patient revenue, Cambodia, Laos, Myanmar, Vietnam in Q2 25.
Oh.
Yeah, and it dropped a further 26% year-on-year in July. Now look, this revenue stream is a small slice of the pie, only about 3% of total revenue. But prolonged issues there could definitely exacerbate regional revenue challenges. It's something to keep an eye on.
Right, a geopolitical factor, kind of out of their direct control. But what about shifts they can influence more? Like technology, AI is transforming everything. Is BDMS adapting?
Now this is where things get truly fascinating. This raises an important question. How do they navigate these complex emerging risks while still pursuing aggressive growth?
Thailand has a national AI strategy, right? And for BDMS, failing to adapt quickly enough, that poses real risks. A lag in innovation, maybe a shortage of AI-skilled staff, potential issues if AI isn't used right in data analysis.
Big potential pitfalls.
Huge. However, BDMS is being incredibly proactive here, really leaning into it. They've put in place comprehensive AI skill development programs. They even have a BDMS Innovation Group contest to generate new ideas internally, plus dedicated training on AI and data management for staff.
So they're taking it very seriously, extremely. What this really tells us is that BDMS isn't just, reacting to the AI trend. They seem to be aiming to actively redefine healthcare delivery using it, building efficiency, potentially creating a significant competitive advantage.
That's a strong statement. Can you give us some actual examples? AI already at work within BDMS?
Oh, absolutely. It's not just theoretical. They're using AI right across the patient journey. For instance, they have the Ally AI Symptom Checker chatbot.
Oh, yeah.
And a digital front door for automated registration. That's already cutting patient registration time by 50%.
50%, that's huge.
It really is. And in teleradiology, their Inspectra CXR AI, it can diagnose chest x-rays in under a minute with 96% accuracy, they say. And it cuts the radiologist workload by about 70%.
Wow. Freeing up specialists.
Exactly. Better diagnostics, faster turnaround, lets skilled people focus on the complex stuff. They're also using AI for lab interpretation, an AI chatbot for language barriers, automated speech recognition for records. Even the pharmacies have the HappyBot robot dispensing meds. Boosts efficiency, reduces infection risk.
Sounds like it's everywhere.
Pretty much integrated. And they got recognition for it too. A SET award in 2024 for Best Innovative Company for that AI chest X-ray tech. It's been used on over 4 million images already. And importantly, to manage the risks, they've set up an AI ethics governance board. And they've folded AI risks into their main IT risk management framework. It seems very thorough.
That's incredibly impressive. Sounds like they're really embracing the future of medtech. But what about the more, let's say, traditional challenges, like supply chains? That's a big worry globally right now.
Indeed, it is, and that's another critical risk area. Third-party partners and supply chain vulnerabilities. BDMS relies heavily on imported medical supplies, drugs, equipment.
Right.
So geopolitical tensions, think about new U.S. tariffs expected from 2025 or changing international rules like Germany's Supply Chain Act or the U.S. Uyghur Forced Labor Prevention Act. All these things could mean higher costs or actual disruptions to getting supplies.
A major potential headache. So what's their plan B?
Well, they have a clear mitigation strategy. It's about diversification, not relying on single suppliers, actively promoting local sourcing where possible, like for generic meds produced in Thailand.
Makes sense.
Maintaining strategic safety stocks of essential items, building strong partnerships, and also training their own people to be aware of these risks. So it's a proactive stance to buffer against those external shocks.
Okay, it's clear they're looking ahead, tackling these complex issues head-on, from geopolitics to AI. Now let's pivot a bit. Let's turn our attention to the market itself. What are the analysts saying about BDMS stock? How's it actually performing?
Right. And what stands out here is how different analysts see both value and growth potential, even with slightly different price targets, which kind of underscores the company's solid foundation. Pi Securities, for example, they maintain a BUI rating on BDMS. They've set a target price of 26 votes.
Okay. How did they get to that?
That comes from a discounted cash flow model, basically looking at expected future cash flows. And it implies a price-to-earnings ratio, a PE, of about 25 times.
Got it. And what's UOB-KI in stake? Are they similar?
They also have a BUY rating, but their target price is a bit higher, at 32 baht.
Interesting range.
Yeah. But the general consensus among analysts seems to be that BDMS has strong fundamentals, and importantly, that it's trading at pretty attractive valuations right now, especially compared to its peers and even its own history.
Can you give us some specifics on those valuations?
Sure. So its enterprise value to EBITDA for 2025, that EBITDA ratio, good for comparing companies, it stands at 12 times. The competitor average is more like 16 times, so it looks cheaper on that metric.
Okay.
Similarly, its PE for 2025 is projected at 19 times. Compare that to BDMS's own 10-year average PE, which is way up at 35 times.
Wow, big difference.
Right. So it suggests it might be undervalued compared to how it's traded historically and against others in the sector.
Those are definitely compelling valuation points. How's the stock actually been doing lately?
Well, looking at recent performance, on August 18th, 2025, the stock was trading at 21.30 baht. It was actually up 1.91% just on that day, so it outperformed the main asset index.
Okay.
And just for perspective, its 52-week trading range, the high and low over the past year was from 19.80 baht up to 31.25 baht. So 21.3 is kind of in the lower half of that range.
Right.
Now, it's important we mention for you listening, while investors often really want to know specifics about, say, dividend yield or dividend stability or key technical chart levels.
Yeah, support and resistance levels.
Exactly. Those specific details weren't actually available in the source materials we used for this deep dive. So our discussion today is based purely on the factual content we had access to.
Understood. Sticking to the info we have.
Precisely. But perhaps here's something to think about as we wrap up. As BDMS continues to integrate this advanced AI into its operations and navigate these really complex global supply chains, consider how these strategic moves aren't just reshaping the healthcare experience for patients, but how they might fundamentally alter the competitive landscape for hospital groups across the whole region. You know, what new efficiencies or maybe even entirely new services could emerge from this fusion of medicine and technology in the coming years? Something to ponder.
That's a great thought to leave us with, the future potential there. Finally, if you have any other stocks you'd like us to cover, please let us know. Don't forget to like, share, and subscribe to support our team. Thank you.